Good morning. I'm Janet Meiklejohn, CFO of Empress Royalty, and I'm very excited to be here today to share our story. So Empress Royalty represents a strategic approach to investing in gold and silver. We listed on the TSXV in December 2020 and under the symbol EMPR. So our forward-looking statements, like everybody else, I will be making forward-looking statements today, and they may or may not be accurate in the future. So, what do we do? Empress creates royalties and streams with our mining partners to either get projects into production or to expand existing production. We have a diversified portfolio of 17 investments exclusive to the precious metals space, which includes 1 producing mine and 2 near-producing mines. We are currently generating revenue from the producing mine and expect to be generating revenue from the latter mines in the next quarter. In total, we expect to generate more than $5 million of revenue in 2022 and more than $28 million over the next 3 years. How did we get here in such short order in the short 18 months that we've been around? Our finance team is second to none. Our board and management have completed more than $6 billion in mining finance transactions. Their experience and decades of relationships provide us with a unique access to deal flow, which also leads to a deep pipeline of potential investments. So just to take a step back for a moment, I want to remind everybody what streams and royalties are. So a royalty is when we give financing to a company in exchange for purchasing a percentage of the total revenue of the mine over the life of the mine. And a stream is when we finance a company in exchange for the right to purchase a percentage of the metal or metals that are produced by the company at a heavily discounted price. So what's the advantage of these types of assets? Well, first, exposure to gold and silver, which Brian talked about earlier. It's in our view, should be a critical component of every investment portfolio as we go into these inflationary times. Also, unlike other junior mining companies that generally have exposure to one single asset, we're able to provide access to a globally diversified portfolio of assets. And this one is crucial. We take a percentage of the top line revenue. So our exposure to any kind of capital overruns or increases in operating expenses is limited. Again, a very important thing as we're moving into this inflationary period. And lastly, it's a scalable model with low overhead. And for the mining companies, it's a non-dilutive source of financing. So, as Brian mentioned, the royalty space has been popular in recent years. Some might even say crowded. There are companies that focus on exploration generation. Those are the ones that create royalties on early stage projects that are relatively inexpensive, but they may or may not ever turn into producing mines nor ever generate revenue. And if they do, that timeline is probably 10 to 15 years out. Then there are the companies that actually purchase royalty portfolios. The royalty already exists and all they're doing is buying it. In this case, they're typically paying a premium and often are in competitive bidding situations and tend to be buying them with shares, so it's quite dilutive to your shareholders. They have no relationship with the mines, they're merely buying income streams. Empress is somewhat unique. We leverage our relationships to work directly with the miners to create royalties and streams that are in the best interest of both parties. We focus on late-stage development projects that need that last capital injection to get them into production, or producing mines that need capital to expand. By working directly with these miners, we are able to structure higher returns and generate near-term revenue for our investors. In just over 18 months, we will have 3 producing investments that we expect to generate $5 million this year. We are delivering on our strategy. So just again to reiterate the benefits of the royalty company structure, so you can see by the graph on the left-hand side that the royalty companies have outperformed both the GDX and the gold commodity. And then on the right-hand side, it's just a quick graph of the life cycle of a royalty company and showing that, that Empress is just on that cusp of that rapid growth. So what's our secret sauce? Our partnership with our investment manager, Endeavour Financial. David Rhodes, our executive chair, is also the managing director at Endeavour. As a small company, we have access to a global finance team with decades of experience in the mining industry. Their relationships help us to identify potential investments in our pipeline. Their assistance in performing analysis and due diligence allows us to move quickly. Finally, we get access to their experience gained structuring and negotiating some of the largest deals in this space. So as the royalty space has grown, companies are chasing larger and larger deals. So we've decided to focus on the small to mid-tier companies that are largely getting ignored. In particular, we focus on gold and silver assets that are in late stage or producing. And we're basically location agnostic. Our mandate is to invest $500 to $25 million, but our sweet spot right now is $2 to $10 million. At Empress, ESG is an important element of our investment criteria. So let's go over the portfolio quickly. So our first investment is Sierra Antapite. So we made a $10 million investment in an underground gold mine in Peru that's operated by a private group, Sierra Sun. This is an already producing mine, and the money is being used to take it from producing 750 tons per day to 1,000 tons per day. In exchange, we get a 4.5% of the actual gold production up to 11,000 ounces at 20% spot price, at which time it reduces to 1% for the life of mine. This stream is expected to generate $2.2 million in annual revenue, and the NAV on that $10 million is $14.5 million. So Tahuehueto is located in Durango, Mexico, and is operated by Altale Mining, which is also listed on the TSXV and is at this conference. We invested $5 million to help bring the mine into production, which should be in the next few weeks. In exchange, and for that, we will get 100% of the silver production, up to 1.25 million ounces. The stream will generate, or is expected to generate, $3 million of revenue annually, and the NAV on that $5 million investment is $24.8 million. Manica is a gold project located in Mozambique that is operated again by a private company, MMP. We invested $3 million to help bring the mine into production, and again, we expect that to happen relatively shortly, in exchange for a 3.375 royalty up to 95,000 ounces, and then it drops back to 1.125%. That royalty will generate $1.5 million, or is expected to generate $1.5 million of revenue annually. And the NAV on that investment, on that $3 million investment, is $5.6 million. Pinos is another asset that is located in Zacatecas, Mexico, and is operated by Candelaria, which is another TSXV listed company. For that, we invested $1.5 million for a 1% royalty. And then we have 13 exploration properties that basically we acquired as part of our direct listing process. So overall, we have invested $19.5 million to date, which has resulted in an NAV of $47 million. Revenue is expected to be $5 million in 2022, $9 million in 2023, and $12 million in 2024, a total of $28 million over the next 3 years, and a market cap of $22 million. That's more than a 100% cash-on-cash return. And if you look at our peers, this is not being recognized. We are, by all accounts, the cheapest royalty company out there, based on price to NAV, EV to revenue, and price to cash flow. We have a strong, diversified board, 3 of which have or are currently working for Endeavour, including David, Alex, and Paul. We have a strong small but a small but strong management team. So we do operate with very low overhead. In terms of our capital structure, we've got 100 million shares, a little bit more than that outstanding. So our market cap is 27 million Canadian, 22 million US. We've got a little less than $1 million in cash and 4.8 million in debt and another 10 million that's undrawn. In terms of our shareholders, about a third are strategic partners, managers and board, a third institutional, and a third public retail. So in terms of near-term catalysts, as we talked about before, we're ramping up at Sierra and Pite. We're about to commence construction at Tawaweto. We're about to commence production at Manica. So all of this, again, is going to lead to what we expect to be $5 million US of revenue in 2022. We've delivered a lot in 18 months, and we will continue to expand our portfolio with our strong pipeline. So just as a final recap, we've invested $19.5 million to date into 17 gold and silver royalties and streams that now have an NAV of $47 million and will generate more than $28 million of revenue in the next 3 years, which is more than 100% of our market cap of $22 million. Thank you, and if you have any further questions, please see Caitlin at our booth. Thank you.